Hey everyone, welcome to another market review. Last week we continued to go up. We had like IWM plus 2, Qs plus 2-ish, SPY plus 1. And in spite of this, we are basically negative on breadth and going down. Hadn't really had a signal UVOL DVOL thing. This is percentage of stocks above 20 MA and its various moving average. This is McLaren oscillator, and this is the sector breadth indicator. And when we switch to the weekly, it's even worse. Like, in spite of going up last week, we have had an impulsive move down somewhat, and things are looking weaker and weaker. There's another thing that I haven't looked at in a while, that is basically liabilities and capital, other than other factors running Federal Reserve balances, which since the 2022 bottom has generally been correlated with price moves in SPX. Kind of broke down here in 2024, 2025, but still generally okayish, meaning it didn't go down too much and then it went up and so on. We had kind of this reckoning that would say was a build up in this area when the market went up, and this went down, and we had a catch up here, and then market starting going up again. The noteworthy thing here is that this has completely collapsed over the past couple of weeks. Weeks? Yeah, since July, actually months. So over the past couple of months, despite the market going up, this has completely collapsed, and there should be a reckoning at some point. When we look at breadth as well, like this is the 1 week performance, and the only things that are actually green are some of the tech names, Google, Meta, mega caps, some semis, actually software. This is software and banking. Everything else was red in spite of IWM being green. Like I was very confused at one point this week because in spite of IWM going up 2%, which is generally high breadth day, we barely even registered that. Like it was a small bump, but not really meaningful. Now, this being said, when there are two windows when the correction could begin. Either today, so there's a good chance it happens today given what crypto is doing. And it doesn't have to be like huge, like minus zero point 0.8, minus 1% could be enough to get us started because I don't expect this to be big. So the same reason that why this is weak. Let's take the McLaren oscillator. The same reason why this, or actually let's take this one because it's more relevant. The same reason why this is weak is the same, or is the same reason why we cannot go down too much in this leg down, because this is already down quite a bit. It's like almost 50% around that level. Uh, it's not like we can, like were we to drop from here to here, a lot of room to drop. But if we drop from here to here, not that much room to drop. So even a small market correction, like 5 to 6%, which is my expectation, would put us in very oversold very quickly. So expectation, whenever the correction comes, be it starting today and the next window is the month turn. So basically mid next week it should be beginning either this week until, let's say, the full next week as well, correction mode, or it starts around here and lasts until OPEX, something like this. These are my two scenarios. But when this correction does come, I expect it to be controlled and muted because we are already at depressed levels on breadth. So it won't take that much of a drop to take breadth completely into the dumpster. So this is why I don't think it's I mean, we have a correction coming, but I don't think it's going to be that large. And looking at some other stuff as well, we had some interesting inflation data prints. First of all, I changed the colors on this one. This is Philly Fed prices paid. We had a new print this week, and as you can see, we had a big drop. The correlation with inflation is visible. and the offset is 2 months. I set it to 2 months now, not 3 months. So expectation is that we are basically here, and we have another likely 2 months of hot inflation prints or increasing inflation prints, and then we top out. So this would come in at November, and that was kind of my expectation as well, that we would probably top out around November. Uh, I don't know about the speed of deceleration in inflation afterwards. We'll have to see. But this Philip Fed prices paid print is an encouraging sign for the Fed that inflation won't go up that much longer. And on the other side of employment, again, change the colors a bit, is we had another drop in continuous claims. Again, this is not consistent with employment going higher. We also had that news this week with the H-1B visas, which will also put downwards pressure on inflation. The fact that basically the H-1B program is terminated moving forward, existing people will still be able to work, but H-1 visas expire every 3 years. So as time goes on, we should not see prolonging of those visas because they cost too much money unless the people are extraordinary. But continuous claims here going down more on last week's print is not consistent with inflation going higher. So we have 2 more months at least of, or expected 2 more months of higher inflation, but unemployment and the jobs market is already turning in a positive way. And we will have jobs data in this week here. Next Friday on the 3rd. So on the next jobs data print, I expect we will see a revised up of the jobs number for August because of the vacation period and people don't answer the surveys. And continuous claims not actually going up, initial claims not going up. That spike for Texas was proven to be fake, and it's kind of a Goldilocks set up for the Fed, meaning they can continue cutting at least one more time this year. We'll see if they do 3 times. I don't think so. But the next data prints, except inflation will be hot, jobs won't be hot. So they probably say that they won't cut in October, but they will cut in December. And when we finally get to December, they will be confirmed that the November inflation print will go down as well, and jobs market hasn't become worse. It improved. So when we finally get to December and the Fed will cut again by 25 basis points, it will look like we're having a soft landing again. Now, going back to the market, let's talk about actual numbers and potential correction. First of all, had another ghost print here at 657.36, and that's like a good target for today. It's recovering a bit, but it shouldn't matter that much. Also, a point to make is that when crypto dropped in the previous cycle, the market didn't drop. Have to. So the first drop here, market barely blinked. Like it had a small correction as well. What's this like? 3.5. But it basically shrugged off what crypto was doing. So don't think that because the market won't drop very much, crypto cannot drop a lot. Same here, like crypto started dropping way before the market. So there's also the possibility that we just keep going up in the market or up sideways, small moves up for another month or so. Without actually topping, or at least until the next window, which is this window here between the 30th and the 3rd. So crypto dropping does not guarantee the market dropping, because in the late cycles when we are forming a top, uh, the weaker asset, which is crypto, can drop way more than the market and sooner than the market. So now let's get back to our stuff. Uh, I'll turn the ribbon on. First of all, on the weekly basis, we bounced several times on the 21 EMA. We bounced once on the 34, another one on the 44, another one on the 21. Uh, Assuming we have a continued trend up, we would still get a correction down to these levels. So this is not even the 5%, it's like 2-3%. Let me force the daily and we go back here on the 40 minutes. So even if we keep the bull trend going, we would still get likely in this week or the next a correction down to here, which is 652.53. So this will move up. So this was level 1, or potentially here, which is 646. These are not big corrections, or these are not big moves. They can happen. This is 169, it's nothing, and this is 2.5. Again, it's nothing. My expectation is 5.6, which is the 620 area. Full correction, I mean. Like somewhere around here. And I'll get to that soon. But these are not corrections. These are just bull market small pullbacks. I don't know what to call them. So these are normal. We can have this, and if we bounce, we continue going higher. So this is like the bullish scenario. It's looking like the market is going to be red for a day or two. This is the scenario where the market is red for a day or two and then resumes, and we just go back and hug the upper trend line, go to 670 and so on. So this is the bullish scenario in which we just do a small correction, the smallest one possible being like this 655 thing, which is the 13 EMA. So this one could be also plausible. And then we just go higher, potentially go even higher to like 680 or something like that within the next 2 weeks. So this is the bull scenario. The bear scenario is you have to go to the weekly. Switch it to the weekly. And again, we're in a classic bull market, but even bull markets have stronger corrections. And the stronger corrections generally relate to the 21 EMA or the 34 EMA, but on the weekly basis. Like, for example, here in April 2024, or here we even overshot a bit, went below the 34. This was like a 20 overshoot of the 21, and so on. Or like this bull phase here from 2021. Uh, we have 121 EMA, 144 EMA, one, let's say, almost hit the 21. This overshot the 21 a bit, but you get the idea. 21, 21, and so on. But we're so overextended over the ribbon for the weekly that it's almost incredible. Like we've been bouncing on like the 8 EMA that we haven't even gone to the 13 EMA on the weekly. So this move to these levels is due. If we actually have a correction similar to what we had here, to what we had here, to this, and so on, uh, expectation is that we will hit either the 21 EMA on the weekly, currently at 623.52, so slightly above the 620 level, which is the target area in my opinion, or the 44 EMA, which is 610-ish, something like this. 609.47, but 610-ish would be good enough. Let's put them on the here. This is 609.47, and I'll put them in, I don't know, red. And the other one is here on the weekly, 623.52. These are not static numbers, obviously. They will change over time. Probably go a bit higher um, as we print another candle. So, like I said, small pullbacks can happen, and the target for those small pullbacks is the daily ribbon. Actually, let me turn it back on. Daily. So, I'll draw the bullish scenarios again, which is bounce here, or bounce here, or bounce here. These are the basically bull trend keeps going. We won't even get close to the weekly levels. But if we actually get a big correction, we would break down the reload the uptrend, which is this. I have to reset it. So this is the uptrend trend line starting from here, and we would go either to the 623 level, which is the 21 EMA on the weekly, and that constitutes a real correction. And after this, you have to be super bullish, like we can probably go up until March, something like this. So if we get this, this is a good buy. Or we get the even deeper correction, which is 610 area, and again, this is a very good buy, and probably go up until March or something. So these are nothing, like between 125 and 2.5%. This is just the market keeps going higher. These corrections, one is like 6% and the other one is 8%. These are real corrections, and the longer it takes for the market to have them, the higher the chance that we will go lower. So if we were to do the correction now, like what we see today is the beginning, I think we go to this level, like 6% correction on SPY, and then we keep going higher until year end. And we should be fine exactly until year end. Most likely January is the next window of weakness. But if the market shrugs this one off as well, like we do this, sorry, we do this area here and we just keep going higher and higher and whatnot, then it becomes increasingly likely that when the correction does come, and the timing is virtually impossible to predict, like it could be at any moment, well, this is what I mean, it becomes increasingly likely that we will do the bigger one. And this isn't even like guaranteed that we stop here. We could go all the way to 600. But if we are at 680 and we go to 600, it's going to be a much bigger correction than anticipated. Like if going to this level is like 11.27. So the longer it takes for the market to correct, the more potential in the drop. If it happens now, I think we only get 6% and then we go higher until year end. If it doesn't happen now and we delay it once again, it could come at any moment basically. October is still a very negative month for stocks. We could have it in October, we could have it in November, we could have it in year end. It seems increasingly likely that it will happen. But for now, we have to wait and see what happens. The fact that crypto is down this much is an encouraging sign that it will happen this week, and it has started as of today. And if that is the case, 620 area, and then we long again into year end. So this is my expectation now. Hope it helps. Have a good one. Bye bye.